Money Sense, bringing an informed financial perspective to the Cayman community.
Good morning and welcome to Money Sense. This is Adam Butler. I am your host this morning. I'm also the Chief Investment Officer of Resolve Asset Management. And as so often happens, I am lucky enough to have my partner, Michael Philbrick, who is the CEO of Resolve, in studio here this morning. And we've got lots of financial events to pour over today. We've got the, let's start with obviously the most dramatic event, which happened yesterday afternoon. The U.S. Federal Reserve have finally, after quite a long time of being on hold at relatively high interest rates relative to what we've seen over the last decade or so, decided that they were going to start an easing cycle, lowering interest rates. There was some debate, actually there's quite a lot of debate about whether they were going to lower by 25 or 50 basis points. Michael, put us out of our misery here. What happened in the end?
It was 50 in the end. I was thinking it should be 50, just given the difference between yields in the bond market versus what you're seeing inflation manifest as. So you're seeing, if you look at websites like Trueflation that have a little bit more of a real-time perspective on inflation, you're seeing inflation at kind of 1%, and rates, wherever you want to go in the curve. Let's go back a month or so, we're 4 to 5%. That's a pretty big differential on a real rates perspective after inflation returns. So that was quite high, and sort of indicates that there should be more of an easing happening from the Federal Reserve. But I actually did not think they would be so bold as to go 50 basis points. So I was expecting a 25 with lots of color that, we're going to go do another 25. When they do 50, it makes me think, well, what do they know that we don't?
Yeah, I think that's what I was wondering, how the market would perceive a 50 basis point cut, because obviously from a liquidity injection, from a sentiment perspective, the market is going to perceive a rate cut as being an injection of liquidity, which is quite fair. But from a signaling standpoint, I agree. I was wondering whether the market would interpret a 50 basis point cut as the Fed saying the market is more, or the economy is more vulnerable than many people believe. And there's just really not a lot of data out there to support this perspective, right?
Yeah.
I was wondering whether maybe they are reacting to some of the wobbles that we have continued to see accrue in the real estate market, particularly the commercial real estate market. Not a day goes by where we don't see an announcement of some private transaction of a multi-$100 million building when it was sold 3 years ago in LA or Denver or Miami or Chicago or what have you, selling for pennies on the dollar because the buyers know that you can't refinance the purchase at anywhere near the low rates that they were able to buy it at, right? And if enough of these buildings get marked down, then it's going to be really difficult for the private real estate funds to not eventually mark their books to market. And now you've got a major credit dislocation. So I'm just wondering whether this is Jay Powell seeing this and just looking to grease the wheels.
Yeah, I think it's beyond just that particular market. Certainly that is an area of acute sensitivity to interest rates. I think sort of the markets, just by their reaction, got it kind of right, knew it was going to happen to some degree because it was fairly mild reaction. And what you've seen under the surface in markets is a rotation away from those sort of higher rate stocks, like a technology stock that doesn't borrow any money, has massive cash reserves on the balance sheet, was doing quite well with interest rates high. They were making a ton of money on their cash and their balance sheet. They were growing quite nicely. Valuations got extended. But under the surface over the last sort of couple of months, you've seen a different type of market, a bit of a broadening in the market. REITs actually performing well. Recovering. Utilities performing well. A broadening out into small cap markets. And remember, small cap markets are smaller companies, so small capitalization, smaller companies, tend to have to finance their debt shorter term. So they're financing debt in that window that's been really expensive, and it's harder for them to finance. They're leveraged businesses. Large cap tech, if it has any financing, is financing in a 10, 15, 20-year window because they're huge companies and have that surety to them. And so they're financing in a much longer time frame. They have much less financing and have cash in the balance sheet to take advantage of rates. So the market is sort of seeing this. This is one of those classic scenarios where I think the market is adjusting, and you're seeing that. You're seeing equal weight S&P start to outperform cap-weighted S&P, making new highs. Russell 2000 starting to do well. Home builders are doing well. So that broadening out, that putting capital towards those businesses that require lending, it's happening if you're looking under the surface. And so I think all of those things, like that commercial real estate, that the Fed is looking at all of those implications down the track and saying, we have tamed inflation to some degree. And at the moment, our real rates are too high. And so maybe that was the 50 basis points that were too high. We did take some time, more time than we took a very slow pace, but now we can go 50. Mm-hmm. Market's reaction is kind of saying that it's kind of expected almost. Yeah,
we're certainly seeing a little bit more follow through today, where the futures on U.S. equity markets and I think globally are quite strong. And we're pushing, at least on the S&P, I think we're pushing to new all-time highs this morning. We're also seeing a rally in gold, a rally in commodities. So, I think the market is kind of interpreting this as a pivot, as the Fed saying they're going to continue to support the financialization that they have been underwriting for the last 15 years. And, what we're seeing, this sort of rotation, strengthening of some of the sectors that were really beaten down more than others, reflects the fact that the market no longer perceives that the Powell Fed is going to enforce greater discipline on the market than they have been used to experiencing over the last 15 years, right? Yeah. I think there was some concern that the Powell Fed might allow for some rise in bankruptcies to, I liken this a lot of times to forest fires.
Right. It's a great analogy.
And, with forest fires, you can do your best to dampen out the small fires over time, and you can be very successful at this for many years. But what this ends up leading to is eventually an uncontrollable large conflagration that burns down all the healthy trees too, right? And so, I keep wondering whether the Fed and the Treasury, who need to cooperate in order to impose some discipline on the private sector, will seek to allow some of these, some of the underbrush to go away, right? Some of the weaker companies to falter and that capital to rotate to new upstarts. But that doesn't seem to be in the cards. And I think really the problem is that the Fed and the Treasury are trapped. We've got just too much debt to allow there to be any fiscal wobblings.
Yeah, the financial economy is too large in comparison to the actual economy.
Yeah, exactly.
And so there's those feedback loops are not allowed. And I would posit to you that probably started under Greenspan in 1987. With the saving of the markets at that point and liquidation of the markets, and then you go into 98 and long-term capital and on and on and on. In 2008, the put that was in the great financial crisis, and I think, as you've alluded to many times in our private discussions, things that were never going to happen, never could be thought of in financial manipulation by central banks and their actual entry into markets. Not even thought of, took a year to do in 2008, and now we're done on a weekend.
Yeah, exactly. It's just it's sad to watch this sort of farce of this narrative of capitalism that's not at all reflected in the underlying dynamics at play. Where, any sign of of there being consequences for bad decision making or taking on too much risk is underwritten by the government, right? And so there's no fiscal discipline enforced. There's no private market discipline enforced. And we've got runaway financialization. And this is now this has taken over, right? So there's and Victor Svets, who we've chatted with privately and who we've had on our show a number of times, I think does a great job of saying, look, we made this decision 30 years ago, as you alluded to, right? And if we wanted to impose fiscal prudence, if we wanted to impose private market discipline, these were tactics that we needed to impose 25, 30 years ago.
Yeah, you took steps in the other direction.
Yeah, we did. We went a different way.
And there's incremental steps. They're always incremental, and they continue to be incremental. And the longer you've been around, the longer you've seen things where you look back and say, well, geez, if that had been contemplated 15 or 20 years ago in our career, it was not even something that the investment zeitgeist at the time would have considered possible.
Right. Yeah.
But this is how you get to these points, is you do it slowly. Each step is another progression in managing whatever it is that the financial crisis of the day brings to bear. That doesn't mean there's not going to be volatility, but is there going to be the type of 1929 or 2008? I don't know. In the nearer term, while they can manage this, while they continue to put out the little forest fires and not clear the brush continues to build in the economy. And, it's interesting because it can go a lot of different ways, right? We've got this massive force called artificial intelligence. And that has the ability to change the productivity dimension of the economy as a limiting factor, right? Human labor is a limiting factor to an economy, and the productivity of that labor are limiting factors. But when you introduce AI and then you roboticize that AI to bring that into a physical manifestation, is there a limit on productivity and labor?
No, I mean,
not really. So
it's a phenomenally good point, and it's certainly the direction. And I follow the AI and robotics sector at a very granular level, and have gotten more and more into the details of that over the last 18 to 24 months. And I don't think the vast majority of people have any idea how quickly this technology is moving, how capable it is even today. The moves forward in training robots and how quickly we can now train robots to do highly complex, nuanced tasks that I think most of humanity would blow the roof off their heads to see what robots are capable of now and how quickly. I see a class of robot 6 weeks ago, and then they release a new snapshot of capabilities today, and you've got a device that can't fold clothes, it can hardly stand up and walk, whatever, and then the next time you see it emptying dishwashers and folding clothes, and they're now training robots by having humans do the tasks, and the robots then are learning the subtle movements of the humans, and it's effectively the same training as they use in the transformer tech that drive like the ChatGPT, right? And they're just learning that this kind of training and this kind of technology generalizes very well even into the physical domain. And so it's shocking how far this has come so quickly.
Agreed. And I'm just, for the listeners, Adam is definitely our subject expert and spends a tremendous amount of time on this topic. And, I think, one of the how much time do we have before we take a little break?
1 minute.
So
we can set up the next segment.
Yeah, just a quick story. I think it was, a year ago when we were at the, you were doing some presentations on AI. One was at the LATAM STEP conference too. And we had done a presentation, or you had done a presentation 4 weeks prior to that. And you had made a presentation of yourself in English through AI, but it wasn't you. It was just, here's a recording of me, here's some
It was like
words.
a deep fake of me.
Yeah, it's a deep fake of you.
Yeah.
And then 3 weeks, 4 weeks later, we had this conference with LATAM STEP, and you had the AI do it in Spanish.
Right.
And everyone thought that you were totally fluent in Spanish. And it was just English enough, Spanglish enough that it looked right. It was just right. So that is the piece. And we're, a full year from there. And let's come back to some of the, some insights recently. We were at the CEC. Raul Paul was talking about AI. That was a room filled with, sort of AI savvy, Bitcoin, crypto savvy people who are sort of on the cutting edge. And, what the thoughts were in the room was surprising to me. And I'll tell you why.
Yeah, absolutely. Let's get to that when we come back.
89.9 Radio Cayman helps you to weather the storm during this hurricane season.
One of the most crucial elements of hurricane preparedness is storm awareness. During the season, it is of utmost importance to pay attention to the latest local weather forecast, as hurricanes do not suddenly form or strike. There are various methods of advanced notification. Utilizing such may be the difference between a favorable outcome and disaster. Both television and radio serve as excellent mediums with up-to-the-minute storm path information in the wake of a hurricane. Another method of tracking a hurricane may be only arm's length away. Your smartphone or tablet can be your most valuable tool before, during, and after a storm, providing countless numbers of apps with crucial hurricane information. Many apps allow you to track storms with moving radar and satellite imagery, plus offer alerts, current conditions, forecasts, advisories, and even video.
This hurricane preparedness tip was brought to you by your community radio station, Radio Cayman 89.9 FM.
This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands.
And now, more Money Sense.
All right, so we're back again. Adam Butler, Chief Investment Officer of Resolve Asset Management, hosting today on behalf of the CFA Society Cayman Islands. And I've got Michael Philbrick, CEO of Resolve Asset Management, as my guest here today. We were discussing the impacts of AI and how it's moving so quickly that very, very few people are able to keep up with the pace of it. And, even those who would generally be kind of first movers or, would be highly engaged in this kind of thing may still be quite a bit behind the state of the art.
Yeah, that was my observation. And remember, humans are just not good with exponential change. And we're good with linear change, but exponential change is hard for us to figure out. And it was interesting earlier in the week, the CEC, along with the CFA Cayman Society, sponsored a chat at the new Signal House for CEC, where they had Raul Paul come in and talk about AI and crypto. And so this was a room full of people that would be selecting against the averages. They're interested in the concept of AI. They're interested in the concept of cryptocurrencies. They're interested in the concept of the exponential change it brings. And even then, I found the resistance of the audience to AI's current abilities a bit astonishing. So Raul's always a very big thinker and thinking, sort of in leaps and bounds that can be challenging for most people to grasp. And just the resistance in the crowd of, oh, yeah, but it's not quite there yet. And it's not going to quite replace us yet. I was a bit surprised because my experience in the way, we're kind of integrating AI as much as we can into our business practices. And the enhancement in productivity is astonishing. The ability for it to provide advice on very complex matters related to securities regulation, if you will, related to compliance issues, where you can, for example, prepare yourself. You have a question for a lawyer that you've had previously. Now I'll go to the lawyer probably only 1 in 10 times. And when I go to the lawyer, I'm going very well prepared with a pretty deep understanding of what the issue is that I'm trying to get at.
Yep.
And so it helps me amplify my productivity. And so I just found the resistance in the room to how impactful this is and how it is being put into robots and how it can have implications shocking, because this was a room that was actually on the cutting edge.
Yeah.
And I think, the story that came to mind was one that you were telling me about the professor who had designed an AI. Any repetitive task that you're doing is better done by AI. Is that you we were chatting about that?
No.
What's the, there's a professor, he's an investment guy too. So he basically went through his day and has designed an AI to kind of follow him around. And if he can't do it better than the AI does it, he is offloading it to the AI.
Right.
Leaving him with, what do I do better than an AI? Where's my competitive
Oh, I know who you're talking
advantage?
about. You're talking about
Professor.
the finance guy.
Yes.
Yeah.
Yes.
Oh, it'll come to me anyways.
Yes.
You'll all know him, or many of you will know him anyways in the audience. It'll come to me. Keep going.
Yeah. Maybe we'll do a Google AI search.
Yeah. You Google search, but yes, I'll pick it up because I know this story too. Yeah. So this is an extremely well-known finance professor, Damodaran.
Yes.
Damodaran. Who decided he was going to see what AI was capable of, right? And so he just continued to have AI replicate the tasks that he would otherwise be doing. He'd compare the AI's output to what he would otherwise have done or what he did, and just increasingly over time observed that the AI was able to take over a majority of what he does during the day. And I mean, just this morning, I was enjoying a whole discussion thread on Twitter. Someone posted that they had uploaded the offering documents for a complex private deal.
Yeah.
And asked the new O1 model from OpenAI to create a cap table and run a sensitivity analysis. And it produced a perfect cap table and sensitivity analysis just from uploading the offering documents, right? And they were kind of wondering, what am I left to do here?
Yeah.
Right? It's pretty. And just to give you another frame, so the new O1 model from OpenAI that was just released earlier this week, they've demonstrated it has capabilities that exceed PhD level understanding and reasoning in mathematics, biology, chemistry, physics. It's not really a model that is well suited to the typical tasks that most people engage in from day to day. But you've got guys like Terence Tao, who is the leading global mathematician, Fields Medal winner, generally recognized as the world's current leading mathematician, saying that GPT-4o, which was the previous state-of-the-art from OpenAI, generally had the capability of an incompetent undergrad student in mathematics.
Right.
And the latest model has the capability of a median postgrad student in mathematics. Median postgraduate student in mathematics, as dictated by the leading mind in mathematics globally, right?
Yeah.
And I've seen example after example of leading experts in these fields come out with examples of just how capable this new model is. And we have a preview version of the model because it's still in training. And when they release the final one in 4 to 6 weeks, I have no doubt that we're going to see another meaningful leap in capabilities. Yeah. And this is the pace that I'm talking 6 weeks now.
Yeah.
We're going to see another meaningful leap.
What's the beyond exponential change? There's one that's even faster.
There's a double exponential. Yeah.
So that's where we're at. But yeah, the Damodaran.
I know, I can never pronounce it.
He's an NYU professor.
Yeah.
Right. And he was on excess return. So anyone who wants to go, watch a podcast, you can take a look at that. And he talks about this process he did on excess returns as an NYU professor of investing, and just thinking through the thought experiment of, I am going to track and monitor my day, and anything that this other thing can do as well as I can, well, first of all, I'm going to delegate it to that. And then second of all, what does that leave me as a competitive advantage in a world where AI is dominating these types of daily decisions? And it's a question that everyone should be asking themselves, right? So that's the true value you're going to add in a post-artificial intelligence world at a pace of change that you've just so eloquently outlined, where you're getting a leap from an incompetent undergrad to an average postgrad student in math in 6 weeks.
Yeah.
And so, people say, oh, that's just math. Well, it's not just math. It's creating anything that has letters and words to it. It's interpreting documents. It's creating full documents for, I don't know, if in your financial services, full prospectus or offering documents or legal documents.
Oh, absolutely. It'll manufacture full, long legal documents. It is demonstrated much better diagnostic capability than your average physician.
Yeah.
The model that was released, GPT-4, that was released almost 2 years ago now, already demonstrated the ability to pass the medical board exams, the MCATs, the legal exams at like the 95th percentile, right? The bar exams. So, and this is like 2-year-old tech, and it is expanding in capability and competency at a rate that I think most people would, or many anyways, would just lack the imagination to be able to comprehend. It really is great.
They also face the age-old adage of when your job depends on you not knowing something, you're probably going to not know it.
Yeah.
And that was something I thought I really felt in the room where I think Raul was doing a very good job at presenting, a very thoughtful, but let's think about this and how fast it's changing, and think about it in 5 years and how it changes your lives. And the head shaking around the room was kind of interesting. And I'm like, well, what did you get on your LSAT? Because I know the 2-year-old technology from AI got a 95.
Yeah, exactly.
2 years ago. So what was your score again? But I think, so that paints a very rapid pace of change, lots of dislocation. It's happened before, moving from, the industrialization of farming from an agrarian society. So this is not new technology. We used to have people working switchboards and things like that. It's happening faster. But one of the things I've also noticed is in a field where you're starting from scratch, if you will, there's some new field and you're able to employ AI, and you're not encumbered with a lot of regulation or a lot of adaptation of old regulation and old legacy. That's really kind of some interesting green fields. Where you have lots of regulation in financial services, in the medical world, I think the change is going to be hampered to some degree by the system itself. Even in our business, having to have AI policies now on how you use it and where you use it and the checks and balances that are required in order to make use of it, they do tend to slant towards a larger organization being able to employ that a little bit more fulsomely due to regulation to some degree. Not fully, but there is definitely some yin and yang in that competitive competition. Whereas if you're in a new emergent type of business that's happening because of AI, and you're able to employ it fully throughout the stack because there isn't a legacy issue, that's gonna schumpeter a lot of stuff.
Yeah. So what's so interesting about this technology is that it enables those at the very edge of the network to build things using AI that get very close to, if not exceed, the capabilities of the solutions that are offered by big companies, right? So, for example, in investments, right? The investment advisory business relies on advisors having an expertise that the typical client doesn't have access to, right? They don't have the time in their day or the interest maybe to become proficient enough in the domain in order to manage their own funds, manage their own estate, write their own will, just generally know what to do, right? Whereas the capabilities that are available to everybody for free, keep in mind, OpenAI offers some of their top models for free in their ChatGPT interface. People are going to discover that these models are capable of, not just performing analysis on a single company, but also performing analysis on your entire household and generating a comprehensive estate plan. And, you can build I watched a guy who has never programmed before in about 2 weeks build an entire crypto exchange.
Right. Yeah.
From scratch.
Yeah.
Using AI, right? Yeah. So, these solutions are going to come from the edges of the network where the incumbents just aren't aware of. And because of all of these regulations, they're going to be unable to move in response to compete. And so I think this is something that's underappreciated, this disintermediation at the very edges of the network.
Yeah. And there are, in the financial world, that's why they have the moats of regulation and government and to actually not allow that.
That's right. All right, we've got to cap it here because we've gone over a little bit. Mike, thank you so much for joining me today. And everyone have a wonderful day. Thanks for joining us.